Hi, I'm Jeff Wecker. How are you today? For those of you who haven't met me before, I'm a former member of the Chicago Board of Trade. I've been in the business now for about 25 years, and I'm happy to say I'm now the #1 trader on ticker-tacker in FX. It's at close to about plus 200% since October, so that's pretty exciting for me. I'm also the host of Wecker's Weekly right here on ticker-tacker on Tuesdays, 4:30 to 4:45 Eastern Time. And you can tune in where I'll be talking about specific trades and trade strategies in general. I'm showing you my email right down here in case you want to send me questions, which is why I put this material up on the board. So there's a lot of detail today, so this gives you a chance to make notes if you want, or you'll be able to watch this show another time on YouTube, on my YouTube channel, as it'll be posted there a few minutes after it's over. And you can also ask questions through ticker-tacker at any time. So today's show is really for non-traders, people who have not traded before, people who may know a little bit about trading, but would like to think about it as a full-time occupation, which is a great thing, and I can contest to that. Especially, the reason the show came about, that I conceived the idea, was that there's a lot of talk today about the new normal. Okay, what is the new normal, and how does it affect all of us? Well, the new normal is generally referred to as, how do you avoid the problems of COVID-19? How do you avoid the problems of being laid off, okay, of not being your own boss, not making your own decisions? And how do you find an income or an occupation that you can do at home, basically, on your choice of hours? So that's what we're going to talk about today. It is how does becoming a Forex trader fit into that kind of environment, okay? And what are the chances for you becoming good at it, to be able to work at home? Actually, I'm a good example of that today. I have a herniated disc, and so all I could do today was make the 25-foot commute to my kitchen, which, we would be doing as working at home in the new normal. So with that, I want to talk to you about the different kinds of trading today, and let's start with Forex, okay? Forex is one of the many markets that you can trade. And I want to talk to you today about why it's a particularly good place to trade, what are the advantages of it, and how is it something that might fit for you? So to begin, what is Forex, for those who don't know? Forex is the marketplace where prices are set to the value of currencies in relation to each other. In other words, if you want to buy something in Europe with euros, what's it going to cost you in terms of dollars? The more expensive the euro is, the more it's going to cost you, the more dollars you're going to have to put out. So all those prices are determined through this marketplace, which is by far the biggest marketplace in the world. It's roughly $6 trillion a day, which dwarfs the stock market, and the gold and silver markets, and Bitcoin markets, almost grouping most of them together. So by trading in Forex, you are trading in a really highly liquid market that's the largest asset class in the world. The other good part about it that I like is that you can trade 24/5. Trading starts Sunday night in Chicago at 4 p.m. and it goes till Friday night, Chicago time, at 4 p.m. also. So you're able to trade 24/5. So if you're busy one part of the day, you can trade in the other part of the day. If you're not sleeping, you can, and many times I've been up at 1, 2 in the morning trading from Chicago and traded all throughout the day. Other days I haven't traded at all. So you're basically in control of your, your own hours. Okay, how much time do you want to put in for what you're going to get out? The other attractive thing about Forex is the leverage. Usually you get about 100 to 1 leverage in your trading, which means that with a small amount of money, you have potential for large income. Of course, leverage works the other way, and so you have to understand risk and risk control, which is something we'll be talking about as we go on. So for those who know very little about what the Forex market is, here's a good book. It's called Currencies for Dummies. It's really not for dummies. It's very good. It's an introduction to Forex and what it's all about. You're not going to learn how to trade with this book. You're going to learn that from your personal coach or your mentor. But you're going to learn, you'll learn the jargon, learn how the currency market works and how the different players perform, like the central banks and other banks and traders around the globe. It's only $9 on Amazon, and I would recommend that for every beginner. And of course, you can get it for free if your library, if the library happens to be open. Many of the people that I talk to about becoming traders, are a little apprehensive. They think they need some kind of special education or some kind of special knowledge of math. High-level math, well, it's not true. Really all you need to be a Forex trader is maybe have basic arithmetic skills, and even if you have trouble adding, subtracting, dividing, multiplying, just keep your calculator handy, which I do. I do all the time. Another question that's asked of me by beginners or wannabes, people who want to get into the field, is how much money do I need to begin a career as an at-home trader? Well, a general rule that I've found over the years in Forex trading is that for every $100 you'd like to make per month, you need about $1,000 in your account. So, for example, if you'd be happy making $300 a month trading Forex, you'll need about $3,000 in your account. And hopefully you can build on that, and the bigger your account gets, the bigger your potential income. To make $1,000 a month, you're probably going to build your account up to $10,000 to do that. So it's not horribly expensive to get into this market to trade. It's certainly a lot cheaper than trading stocks or futures that have big margins. Forex is certainly the lowest price entry to get into and trade. Okay. Now, if you're going to do it, obviously you're going to need a computer. And people ask me what kind of computer and software will I need and what's going to cost me. So I've just put this together. You can jot it down, or you can just take a look at it on YouTube later and get the details. You're going to spend somewhere, to get what you really want, you're going to spend between $800 and $1,200 to get the right computer. And it really doesn't matter what brand, whether it's Dell or IBM, they're all good. You just have to, but you do want to have these minimum specifications. Perhaps the most important thing is your internet speed, which you will get from your internet provider, whether it be someone like Comcast or AT&T. And you want to get an internet speed that's at least 50 megabits per second minimum. So ask for that when you have your ISP set up your internet. As far as the speed of the computer, I made a note here, the speed of a Core i3, which is Intel 3, or Core i5, is plenty fast, and you can ask for that. One of the most important things, though, is the display down here. I prefer, and I would strongly recommend a 17-inch monitor for clarity and to be able to put several things on the screen at once, and it just looks better and will make your life a lot easier. I've traded with a 15-inch monitor, for many years, and I was able to do it, but you'll find the 17-inch well worth the money. Storage is really, the amount of storage is not that important in the computer for trading, but the RAM, the random access memory, you should ask for a minimum of 8 gigabytes of RAM. So these are the hard specs for the kind of computer you need. You can, as I said, jot them down or make a note of them by looking at this at a later time. But if you get these minimum specifications, and you should be able to get it for something close to $800, $900. That's what I would recommend. As far as software that you're going to need, that is virtually free. I have not bought any software for trading since I began. Your broker supplies you with the trading platform software, which will show you all your charts and let you place orders, do all your buying and selling, and all that software is free. There are probably hundreds of indicators, which I'll mention a little later, things that measure things like momentum in the market and direction changes, etc. All that stuff is available for free on the internet, and or from your broker, or both. And like I said, I've been trading for 25 years. I've never had to buy a piece of software to do what I want to do. So now that we know what it's going to cost to get into business in terms of hardware, software, and how much capital you're going to need to trade with, let's talk about perhaps the most important thing. How are you going to learn the ups and downs of the business? It's a very difficult business. I mean, 80–90%, it's a saying, 80–90% of the new traders lose 80–90% of their money in 80 to 90 days. Well, that's probably not too far from the truth. So this is a very tough business, and you have to be good. You have to be different. And that is the question, what is going to make you different? What is going to make you different from thousands of people, who read books, who go to seminars, go to webinars, and they all learn the same thing. They all learn the same 1,000 indicators that they have to study and chart formations and things like that. But obviously that's not what makes you a winner. Because if it was, everyone would be winners. And of course that can't be, since Forex is a zero-sum game. So for every winning trade, every winning dollar, there's a losing dollar. So this becomes the first question you have to, ask yourself. What's going to make you different? What's going to make you not part of that 80–90% who lose all the time? And I would suggest to you that that's going to be dependent on the personal coach that you pick to work with, or mentor, if you want to use that term. I like to give this example here. I talk about Tiger Woods. Could you imagine if Tiger was having trouble with his golf swing? Do you think he's going to get a how-to book or go to a how-to seminar? No, he's going to go work with his personal coach, who watches him hit golf balls, and as he hits them, make adjustments, make suggestions, and continue to watch until he gets it right. Well, that's how your personal mentor or coach should work with you in trading. First, you should learn, okay? Learn from someone who's been in the business, who has succeeded, who knows the ups and downs, and can teach you, what works and what doesn't work. And you need someone who's going to not just teach you, but also work with you, to trade with you on a daily basis, okay? And to watch you trade and to see how your trades go, what you did right, what you did wrong, let you know at the time what it is, and make corrections as you go. And with that kind of monitoring, that's how you become a good trader. So I always recommend that you spend a lot of time early when you get started in picking a personal coach or a mentor. Find someone who's traded in all kinds of markets, not just bull markets, but bear markets and sideways markets, because they require different skills. You'd also like to trade with someone who's lived through the black swan events, COVID-19 being one of them. These are things that are unpredictable, nobody saw it coming, and can cause tremendous dislocation. And you have to know how to be prepared for that. You have to understand risk, and you have to understand how to control it. Then after you've found a personal coach or mentor with these kind of credentials, then you want to talk to several of their students. So just listen to what someone tells you, how their students are doing. Talk to the students, ask them how they learned, ask them how they're doing now, and that's going to help you make a decision. And as I said before, make sure that your personal coach has time to trade with you, not just teach you 1,000 things that everyone else knows and then turn you loose. I'm still in touch with all my students from even 5-10 years ago. After they take my personal course, I work with them at no charge. They can call me anytime, day and night, to discuss a trade or discuss a specific strategy. And, I think that's important because if you're having a problem, you don't want to go searching for someone to make an appointment for 2-3 weeks down the road. You want answers today, and you want someone who can watch you in action and tell you what you're doing right and what you're doing wrong. One of the other things people ask me is, how much time will I have to put in every day? Okay, what are the busy periods in the market? In my teaching, my personal coaching program, I generally work with students about twice a week, an hour and a half session each time. So about 3 hours a week of working together, followed by homework, okay, and followed by going over the homework. And then after a couple of weeks, starting to put these things into practice. And we do that by trading in a demo account with play money, okay? And we do not go to real money until we're showing consistent profitability in your demo account. So it's going to be a constant thing of learning, making the trades, watching you make the trades, evaluate the trades you made, making adjustments, make corrections, just like a tennis coach or a golf coach, okay? And that's how you do it. You don't do it by trying to learn, a million different things that'll just kind of mess your mind up. As far as how many hours you're going to be working, it depends whether you're going to see yourself as an active day trader. If you are, then you're going to be watching the screen a good part of the day. Busy times for trading, for me generally, are 6 a.m. to 2 p.m. Central Time, Chicago time. And but if you're busy, then it continues to trade around the clock, going from the U.S. to Asia and then back to London in the morning. So if you see yourself as an active day trader, you're probably going to pick one of these 8 or 9 hour sessions to be traded, watching your screen and looking for trades. But you do not have to be a day trader, okay? You can be what's called a swing or a longer term trader, which I tend towards. This is where you spend much less time in front of the screen, but you spend a lot more time finding and planning out your trades, studying your charts, making your, and putting your trades in place. And once getting in them, you're usually in them for anywhere from 4, 5, 6 days to 2 or 3 months or more. And that's called swing or long-term trading. And you have a choice of which one you would like to be, or you can be both. I would say I am both myself. I prefer the longer term or swing trades, but I do day trade as well. Excuse me. So next question, what are the best assets for me to trade and why? Should I be trading gold, stocks, currencies? Well, I want to say the principles that you learn from your mentor, and certainly for me, would hold up in any kind of market. As I said, I've been trading 25 years. The principles are pretty much the same, and I've used the same principles whether I've been trading S&Ps or gold or silver or Forex. So the key thing is to learn the fundamentals of trading. There might be little subtle things in each market that, of course, you want to learn, but the general structure for trading is pretty much the same. It hasn't changed. There are, of course, there's a lot of high-speed trading, a lot of robotic trading today, but even so, things have basic fundamentals of what you need to do to be a successful trader have not changed. So the next question I usually get from potential students is, what can I expect to earn in this business, and how long is it going to take me? I have found that, as I mentioned, the students and I tend to trade in demo accounts for a few weeks to a month or two until they start to see consistent profit. Then we move on to real money, and that might go on for another month or two. But usually after 4 months, the students are trading by themselves, and they're calling me, day or night with questions that they have for specific trades that they want to do or they are doing. As far as income, is really the nice part about this with 100-to-1 leverage, okay, and there's really no limit on the amount of money you can make. But I don't want to simplify it. Most people keep saying this, most people lose, 80-90% lose. So there is tremendous income, but you're going to have to be good, you're going to have to work hard, and you're going to have to have the right teacher. Next, let's talk a little bit about the tools that you're going to use as a trader. There are basically 4 tools that I list here. One is technical analysis, which is the use of charts. Let's bring up a chart here just to give you, teach you how to trade, but show you what a typical chart looks like. This is a Japanese candlestick chart, and it's a chart of the euro against the Australian dollar. This happens to be a 5-minute chart, which means that every bar that you see on the chart is 5 minutes of activity. Each 5 minutes, the top is the high of the high price of the 5 minutes, and the bottom of the candle is the bottom of the wick. In this case, is the lowest price of the day. The filled-in candlesticks are down days, and the ones that are not filled are up days. You see a lot of dots around here and some graphs down here. These are basically momentum indicators. Momentum's a very important part of what I teach. We want to know when something is running out of steam, where it's been overbought or oversold, and I tend to be quite interested in the momentum of markets. Now, with these charts that are all provided to you free by your broker, you can look at a currency pair in many different ways. You can click on monthly. Okay, for example, now you can see a 20-year history of the euro against the Australian dollar. And then you can drop down to weekly and see what it's done in a shorter time. In fact, you can go all the way down to daily, hourly, all the way down to 1 minute. If you're a day trader, as I've talked about, you're probably going to spend most of your time with the 1-minute charts and the 5-minute charts and be looking at things like momentum. If you're going to be a swing trader, you're going to find, when you do your studying, you're going to find most of those trades on your weekly and your daily chart. You're not going to find a huge move on a 1-minute chart. You're going to find the big moves, the long-term moves, what I call swing trades or longer-term trades. You're going to find them on your weekly and daily charts, okay? And you will learn all this working with your personal coach. I'm not trying to show you how to trade today. I'm just giving you a picture of some of the tools you're going to work with. So charts are going to be an important part of what you work with, as well as indicators that indicate various changes in the market. Okay, the next thing, next tool that traders use is fundamental analysis, okay? And that's a very tricky thing. And you have to be really, if you're going to use fundamental analysis, you have to be able to figure out if the Russians are changing their policies with natural gas or with oil, how's that going to affect the market? How's it going to affect the Russian ruble against the dollar and everything else? Well, you need a lot of information to do that. And most people do not have access to that kind of information. And even if they did, who knows if you make the right decision, because what happens in the world is one thing, how the market reacts to it is another thing. So I tend to use price action in my trading much more than fundamental analysis. And the reason is, very often you'll see a big price move one way or the other, and then the news comes out, which is too late for you to get the news. You've heard the old rumor story, you know, buy the rumor, sell the news. Well, that's what really happened. So the news is going to be much too late. The insiders have already taken their positions, and they're going to be getting out, taking profits as the news come out. So if you make the trade when the news comes out, the market's going to go back the other way and take you out and, you know, make you a loser in that. So I prefer to trade based on price movement, price action. People can hide news, they can distort news, they can feed you incorrect stories. They cannot hide the price action. And price is going to go where the demand is. So that's the second part, is fundamental analysis. The third important thing you're going to learn a lot with your mentor and personal coach is about trading psychology. And how does it affect your trading? There are a lot of human weaknesses when money comes to get involved. And so you want a system, you want to build a system that encourages patience, that makes you sit on your hands until everything comes together correctly, and then you make the trade. It's the people who don't know how to sit on their hands, who have to be pressing buttons all day, who are going to be the losers. I put a little quote here from Jimmy Rogers, a well-known long-time trader. He says, I never do anything unless there is something to do. And, you know, I've kind of always followed that, which means I'm not going to make a trade unless all the factors that I need to be in play are into play. So you definitely want to develop a system with your mentor or personal coach that helps you to do that. The fourth element in trading is risk and money management, probably the most important of all the four tools that you're going to have to work with. I mentioned earlier, people always ask me what's the best trade I ever made or the best trades I ever made. I always tell them it's all the losers that I get out of quickly. Losers, hanging on to losers is the thing that kills you. It messes up your mind from making new trades, and it's hard for you to focus. So if you get out of losers quickly, you're going to feel good. You're going to be able to focus on the next trade, which is all that counts. So you're going to spend a lot of time learning, understanding risk and money management. Picking winners is not that hard. I know a lot of guys over the last 25 years who made a lot of money picking winners. But you know what? Because they didn't understand risk, they ended up giving it all back plus more, and eventually left the business. So always keep that in mind. Make sure you have good risk control things in play in your system, and that you learn them and use them. So to wrap up today, how do you get started? If what I've talked to you about today has interest for you, and you think you'd like to, treat the new normal by finding an occupation to do at home, you can ask me questions on my personal profile page on TikTok, or as I said, email me at jwecker4@gmail.com. If you want to decide you want to be a full-time trader, you can read about my personal coaching program on Ticker Talker. Or if you'd rather be a passive investor, you can simply sign up on Ticker Talker for my trade ideas. They're posted daily, and you can execute the trades yourself or through your broker or someone else. So in summary, I want to wish you the best for 2020. It's a good time to remember something that I learned in one of my first jobs. When the boss used to walk in to a crisis when everyone had their hair on fire, he would look around and say, well, what kind of opportunity do we have today? And, we'll see what we have for the new normal. With that, have a great day, and we'll see you soon.
The risk of loss in trading commodity interests can be substantial. You should therefore carefully consider whether such trading is suitable for you in light of your financial condition, and considering whether to trade or to authorize someone else to trade for you. Past performance is not necessarily indicative of future